Our next session is our Equipment Executive Roundtable discussion. This is going to be moderated by John West from VLSI Research here in Europe. Just a short bit of information about John. John joined VLSI in 2000 and is responsible for supporting all of VLSI's research activities in Europe. In addition, he's developed the critical subsystems market service in 2001 and the PV market equipment market service in 2005. He's also the author of numerous proprietary market research reports, and he was awarded an MBA from Cranford University and has a degree in medical physics from the University of London. I'd like to invite John to come up.
So do I stand up here or do I stand here or sit down? Okay, I'll stand up. So I'd like to introduce, we have Stefan Rinck from SINGULUS, Dieter Manz from Manz, and Peter Tinner from Oerlikon Solar, who've kindly agreed to take part in this panel discussion. So what I'd like to do is okay. Okay, right. Okay. So what I'd like to do is just give a little bit of background information on where the industry is and give some sense of the scale of the mess that the industry is actually in. So really, the data I'm showing on here is quarterly equipment sales over the last 5 or so years, and you can see the scale of the problem. We had Q2 2011, quarterly sales were about $2.3 billion, and now they're running at around about $400 or $500 million. So that's a drop of 80% in the course of a year. So essentially the last 12 months, the industry has been in free fall, and it's just about hitting bottom right now. Q3 looks about the same. It's still heading downwards a little bit, and there's no end in sight. So the real issue for the industry is what happens next. What does the industry have to do to recover from this situation? But the problem for the industry is one of price. I think if you look at the industry as a whole, everyone's very familiar with the demand side subsidies, feed-in tariffs. Everyone's quite knowledgeable about those. They understand how they work. But effectively, the last year, the suppliers of PV cells have actually been subsidizing the industry as well. So if you look at last year, there was about $30 billion worth of sales, but there was also about $4 or $5 billion worth of losses. So you add that all together, it cost the industry around about $35 billion to produce those solar cells. So essentially what we're looking at is module and panel prices are effectively 15% too low. Okay, so the suppliers are subsidizing the industry, and that's sucking all the money out of the industry, and they don't have anything left to invest in equipment. You look at 2012 is a little bit better. I think the prices are around about 7 to 10% too low. And this is a huge problem for the industry. There's no money, so there's nothing to invest. Okay, and it's a real problem. So with prices so low, they can't make money. So they have to have, for the industry to recover, we need prices to recover, or we need a step change in manufacturing technology. Now, right now, neither of those look that likely. Okay, so really, the issue for PV manufacturers right now is, if they have any money, what are they going to spend it on? So really, this is the first question I have for you, Stefan. I mean, what can your company offer the industry to help them become profitable again in the short term?
Okay. Yes, thank you, John. Yeah, we as equipment suppliers, we are machine suppliers at the end of the day, and we have our weapons. We can deliver machines which are more productive, which can increase the efficiency, which can lower the OPEX, yeah, so water consumptions, power consumptions, all these kind of things. So we would like to be very much challenged from you as a module suppliers, from our customers, to be able to develop new machines. So that is something we can do. We can work on standardization. We have our lobbies where we meet together. We have a, let me say, stabilized organization where we can do something and where we can offer a lot. But I would like to jump, John, a couple of minutes ago to what Finlay showed us. Two main messages I got out of the presentation and to see what is necessary for our industry. The good message was that the polysilicon companies are still earning a lot of money, even when the price is down at $20 per kilogram. Yeah? So that was a really nice message. But I think we have to expand our scope. Yeah? We are looking at the moment from the polysilicon until the module. That's the scope we have at the moment. But that scope is for our industry, I think it's not big enough. We have to expand that scope because we have to expand that until the electricity at the end is fed into the grid and is sold into the grid. Yeah? So we had a long discussion on Monday with some politicians here in Europe to see what happened. Yeah? And first of all, I think we have to say we realized a great thing worldwide. We have now round about 60 gigawatt PV power installed. Yeah? The market demand for PV is still very high, but what is missing at the moment is growth. And why is there no growth anymore? And what we found out a little bit on Monday and what we figured out a little bit is that it is missing now, Finlay, that we are going to expand this scope until we sell the power, because the politicians, they don't know what's going on in this industry in some cases. And what we found out is that there are now a lot of countries, for example, in Europe, which reached already the grid parity, where the break-even, let me say, is reached already in Spain, in Italy, in a lot of areas in Germany, in Denmark. So we need really investigations to show that, and then we have to say what is necessary to do. And at the moment we found out that there are a lot of countries, for example, where it is not possible to feed the power into the grid. Yeah? And so I want to say we have to do much more, so we have to expand our scope, that we come back to the market growth we need, and then we have also growth in production, and then we at the machine suppliers can do a lot really to help you.
Okay, so I agree with most of what you're saying there, Stefan. I have the same question to you, Dieter, really, is you understand trying to stimulate demand is one thing, but again, the cell manufacturers still have to be profitable, and they can't do it with the production process they have right now. So does your company have a program to help them get higher cell efficiency and low cost?
Yeah, of course. Our company is also working on this very intensively. I think this is the only chance. So we fully agree with the figures we have seen. There's actually no spending in adding capacity, maybe for another half year, maybe even for a year in the whole industry. So the equipment industry, of course, has to focus on higher efficiency processes, and this is what we also do in Manz. So we developed completely new equipment in the crystalline area for the deposition of passivation layers. We are one of the leading suppliers of laser equipment for the advanced cell concept. So this is something we are focusing a lot, and this is most of our revenues right now are in this, let's say, upgrade market segments where we really can help our customers to bring up the efficiencies. But I think this is, on the end, only a short-term help for the customers. So there will be a need, of course, to change the complete equipment that is in the market right now. We have seen before there's a lot of multicrystalline equipment that is running right now in 16, maybe 17% efficiency level. This is far too low for the future to reach the cost levels. So there have to be new manufacturing lines, new technologies coming up to 19, 20% in the crystalline area. This is only possible with completely new technology. I think this is what a lot of people don't understand. The upgrade is limited. So you may have the chance to upgrade a line that's running on 16.5 to 17.75, but you have no chance to go to 18 or 19 with an existing line. So that means the huge capacity that is there already today need to be replaced in the next couple of years. I think this is a really huge opportunity for the equipment industry. This is something that we prepare ourselves by developing new equipment, by also we call it closing the gap. So Manz is now offering almost all the tools from one hand. So this is another big topic we see, is to get rid of interfacing in the production lines. So today the customers, they buy tools from different suppliers. So they have, some of them have big hassle with bringing them together, make an efficient production. And this is also something in China we have huge potential is efficiency of production. It's not efficiency of module. It's the efficiency of the way how they work. Some of them are, let's say, from our German perspective, really chaotic in the way how they organize their production. So there is a lot of room in improvement also there. And this is also something we are helping our customers to do so. The next big topic is, of course, technology change, what we see. And this is also why Manz is working in both technologies, even if thin film is very small right now. But we are very much convinced that thin film will have a much bigger growth in the next couple of years. And especially in our company, we are focusing on CIGS. And we are really proud that we could announce the world record recently. And we have on our booth the world record module with 14.6% efficiency in CIGS. So that's the first time that we reached with thin film the average efficiency levels from the multicrystalline technology, and that we can do on a much lower cost. So we think there will be a recovery of thin film in the next maybe 2 or 3 years coming up, and thin film will have a chance to grow as the market becomes bigger, and the thin film will have really the chance to be cost efficient in big scale manufacturing lines.
Okay, thank you, Dieter. Actually, that was my next point, and the next question for Peter is actually the current state of the industry is actually turning out, could actually be a very good opportunity for thin film manufacturers to get back in the game again. Because if you look at what happened the last 3 or 4 years, with the price of polysilicon falling so dramatically, prices for crystalline silicon cells were falling fast and far. It just left behind the thin film manufacturers. But what we're coming to now is a period where the prices have to stabilize. In my slide here, you can see they just cannot afford to subsidize the industry. So prices either have to stabilize or they have to go up. Now, this actually gives thin film manufacturers a chance actually to develop their technology, maybe a window of about a year, year and a half, to actually get the cell efficiencies up and the costs down. And I'm assuming Rinck and Solar have a plan to do just that. So what's your feeling about the next year, year and a half?
Yeah, sure. It's all about cost, and we moved our cost per watt peak below $50, and it's also about the capex, the investment, and we also achieved there a value below $1. But what is very important, as you mentioned before, you need money to spend, and I'm also a little bit worried about that for this year, and even also for 2013. Because if you look on the top 10 tier 1 suppliers, the debt is about 17 billion US dollar in total, and of course the banks are afraid to get the interest rate back, or even the debts will be probably not paid or postponed, and this is a difficult situation to pay back. So I'm not so worry about the demand and the supply. I'm more worried about the cash flow and the profits of the module manufacturer. If they are not earning money, they will not spend it. And if they spend it, of course, they will spend that for the technology which gives them the most return in the shortest time. And so therefore we are very convinced that thin film will play a role, because we are today, as I mentioned before, below 50 cents in manufacturing and below $1 in capex investment per watt peak. So this is for all of us a difficult time, but in general, if you look on the long term, I'm very convinced that solar will play a big role. But we have to be sure that the module manufacturing generating profits with the modules, and how long does it take? That's probably the difficult question here, which we ask all of us. And in the meantime, as also other speakers mentioned, we have to reduce the cost and we have to increase the efficiency. The problem, of course, is for a lot of companies, you need a good balance sheet to overcome that situation. And if one of the big players in Japan will be in a Chapter 11 situation, then the banks will be quite worried about that, because they have a lot of maybe write-offs or correction from their balance sheet, and then less money will flow in the whole solar industry. So this is a very, very difficult situation, in my opinion, and we have to work carefully, and we have to work very close together, the module manufacturers, the suppliers, the raw material suppliers, to overcome that situation. I think in such a difficult situation, the whole industry have to make a step more together and not see them as always as a competitors. So it's an industry which we have to promote.
Okay, thank you, Peter. Okay, so clearly, you know, it is a difficult market right now, but also to make things a little bit more complicated is we're seeing the emergence of Chinese equipment suppliers. So if you look back in 2006, they probably supplied about 5% of all the equipment, and this year it's probably about 15% or 14, 15%. Do you see threats from Chinese companies, and if so, from in which particular areas? So Stefan, you first.
Yeah, so that is difficult for us as an equipment supplier to see into these Chinese and into the pocket of our Chinese customers. We hope that they survive and that they can make money in the future. But as we said previously, we have to work close together with them to offer them our equipment, the new ideas, with, for example, backside passivation, aluminium oxide, what we are promoting here at SINGULUS at the moment on the booth. So a lot of ideas to enable them to come back to better efficiencies and to profitability. But difficult at the moment is, of course, also the underutilization we see at a lot of companies, because they have expanded their production so fast and that they are now underutilized, and they need more turnover, more business in PV to come back to a profitable situation, and that they are then able to invest in new technologies which we are offering. And so that is the position where we are in at the moment.
Okay, but are you seeing competition from Chinese equipment manufacturers?
Yes, of course, there are now coming more and more Chinese equipment manufacturers also in the picture. They are starting with the, let me so-called, lower technologies. We see them in wet chemistry, they are coming up, and that's, of course, they also want to participate in that business. But we also have to understand, in this situation where the investment for the equipment is rather low, we will not see a lot of Chinese competitors coming for this equipment industry, because they have no business at the moment, as we do also. And for the future, mainly new ideas are required, because we understand, and the whole industry understands now, with what was delivered so far in terms of equipment, that was not enough to make money anymore. We have to go for new solutions with new equipment, with new technologies. And at the moment, we as a European industry can offer a lot of these ideas for cost reduction, and we don't see that Chinese equipment suppliers are at the moment able really to offer machines with these new technologies.
Okay, so Dieter, I guess the same question. I also know that you have, you actually manufacture in China as well, which is quite a brave move, really. How's that going?
Yeah, I think it's a very clear development. There will be a threat from Chinese equipment manufacturer. This is a very clear plan also of the Chinese customers, and even if you read the 12th five-year plan of China, there's a very clear statement they want to have 80% of the equipment built in China. That's the goal that is set by the local governments and the central government in China. So, and this is of course something we have to deal with as a European company and equipment supplier. From our side, there are two ways to work on this. One is, of course, I agree fully with Stefan, this is innovation. We have to push our innovation in products, in processes even faster. We have to develop new technology that helps the customers to bring down the cost, and there is, of course, a gap in technology in between European, German companies and the local companies, but on the other hand, we have a huge gap in price. So, and this is also something that we've, in Manz from our strategy, handle very clearly. We built a very big factory in Suzhou in China. So we opened this in May this year. This is our biggest factory we have in the whole company. It's almost 3 times the size what we have in Germany, just to give you an idea. We have room for about 700 employees there. Right now we have about 500 doing equipment for the LCD industry in this factory, and this factory is prepared also to have more and more production for the PV industry. And this is our very clear strategy. We moving the lower end technology to China into local production. Of course, the customers, they need cheaper machines as they don't make money anymore. They cannot afford, like they did a couple of years ago, to buy German priced machines from Germany. So we have to go to China with our lower end. Of course, this is risky. We have to, on the other hand, to protect our IP. So this is why we also develop some IP protection strategies. So some of the machines stay in Germany, some of the sub-assemblies stay in Germany, but the majority of the equipment, at least at Manz, we will move to China into local production in China. And also we have another fairly big manufacturing site in Taiwan where we do the more IP-sensitive products and ship them also in the Taiwanese and Chinese market.
Okay, thank you. So again, I guess for Peter, yours is a special case because again, in China, you have a couple of large Chinese equipment suppliers, and one of them is a top 10 equipment supplier, and you're having to compete directly against them. I mean, how does that affect your approach to selling your products to Chinese cell manufacturers?
I fully agree with the comments from Manz. We have to follow in midterm, long-term to the market where the modules are produced. I give you an example in another portfolio from Oerlikon. We are one of the biggest textile machine manufacturer, and 60% of the textile industry is coming out of China. And we moved actually this year our headquarters to Suzhou. We have there 2,500 employees. We started actually maybe, I would say 10 years ago with a manufacturing only, but today the headquarters of the textile group is also in Suzhou. And as simpler your machine is, or as simpler the process is, as faster you have to do that. And we are also following a structure like a mixture that we do very complicated machines like a Kai or a TCO still in Europe, but handling machines and so on will be sourced in China sooner or later. And of course, unfortunately, the European solar industry is not growing, at least the manufacturing one. And if you are not very close to the manufacturing, you lose probably with the time the innovation, because your feedback from the production is not so quick. So therefore, it's necessary to move sooner or later with some production to China.
Okay, thank you, Peter. Okay, so the next, I think it's understood the next 12 to 18 months is going to be very tough for equipment suppliers. So this is a final question. So Stefan, what's it going to take to survive this downturn? What do you need to do?
Yeah, once again, you have to have a stable balance sheet. That is very important. You have enough money to survive in these difficult times. That's an important factor, of course. But on the other hand, we are machine suppliers, and we have to develop now new machines. We have to use the time to be ready when the business is coming back again, and that's what we are doing. And we are showing here, for example, on the fair, a big portion of new developments, and we will go ahead with that. That's what we are doing. And of course, we are also trying now to discuss more deeply with our customers if we can develop customized machines with them. And at the moment, we feel that is a good point because we also see the industry has to more differentiate from each other, because what we see at the moment is everybody is more or less selling the same, yeah? And there are not unique selling points on our customer side. They all have the same product, and they only can fight about pricing. And we have now to work together with them also as machine suppliers to help them to differentiate from each other. Yeah? So they not have to fight anymore only in pricing, so that they have also arguments in the future with new products, with new ideas. And when we see all the possibilities for the architects in the future to implement solar technology in the buildings, which then require new machinery, new equipment, new ideas how to produce these solar cells, it's a huge market, and that's also something where we are working on to customize more machines, to work closer together with our customers all over the world, so that we can help them to develop new products which then, for example, can be integrated in buildings to really get access to this huge market in the future.
Okay, Dieter, what do you need to do to survive the next 12 months?
Yeah, like everybody, we have to make money in order to survive. So, and I fully agree. It's a question of balance sheet and how deep are your pockets right now. And for us, it's also a very big question of diversification. So it's obvious if you want to survive the crisis as an equipment supplier, you need some other business. Nobody can survive on the very low revenues that are generated in the PV industry right now. And especially we at Manz, we are very happy that we really had been successful. So we always had a diversified strategy in our business. So we are working on 3 business units. So solar was, of course, the biggest one in the last years. But we always had a pretty good business in the display industry. So Manz is one of the leading manufacturers of wet chemical equipment and automation systems for the manufacturing of thin film displays, TFT, LCD displays, and touch panels. So this business is really moving on very well right now. So we are benefiting a lot from all these new products that are coming, like iPads and iPhones and whatever coming to the market in huge volumes. So this helped us a lot in Manz this year. So we will have a more or less steady revenue, but in this year from last year. But just to show what happened in our company, the solar revenue dropped from about 40% to below 10% this year. So that means we had to really compensate a huge part of revenue that was missing in our company this year. And luckily, in our case, we had very nice growing market conditions in the display, especially in the touch panel business. And we have a fairly new business that is also growing by almost 100% this year. This is the equipment for the lithium-ion battery market. So this is also a new emerging market where Manz started to work about 3 years ago. And now it's already about 15% of our overall business this year. And it's a growing business where we really developed good expertise, and we see also a very good link together. And I think this is the next discussion about energy storage and renewable energy. And I think this fits together very well. This is also why Manz is focusing on these 2 industries in the area. And this is, for us, the key, the diversification of the business model, the synergies in technology. Of course, otherwise, diversification makes no sense. If you have to do too many different developments, you spend too much money. And this is our very clear strategy for this year. Next year, we will make money in the other areas, and we spend this money for innovation in the solar industry. I fully agree with Stefan. There is the need to develop new equipment. I think this is a very clear message to the market, and this is also very clear from all the analysis what we see. The customers, they need to go the next step. There is no choice. So all the big tier 1 players, they cannot continue like today. Maybe they can do it for a while and accumulate more and more debt, but this is not an endless story, right? There's only 2 choices: go out of business or buy new equipment. This is the only chances they have. But unfortunately today, there's nothing they can buy to get really down to 50 or lower cent per watt. So this needs innovation in the equipment industry, and this is, I think, an ongoing issue for us and an ongoing challenge for the equipment industry. And this will need a lot of more money for the innovation and for the development of these tools. And this money have to come from somewhere, right? And I think this is why we are very much focusing on this diversification model in the revenue and in the business in order to be able to have enough cash to afford the new developments that are required for the PV industry.
Okay. So, Peter, what are Oerlikon's plans for the next 12?
Of course, the best thing would be new orders. Sure. But of course, as mentioned already, cost saving is very important. And here I also think the industry has to be closer together. We have to think about, do we really need 2 exhibitions in Europe? That's also a lot of cost. We are discussing that also with IPVIA. Maybe should the industry not coming together and say, okay, we focus maybe on 1 big exhibition show. Second, the balance sheet helps a lot. We are there, luckily, in a good position. And you have to save costs, but not to cut the future. So this means you have to be still innovative, and you have to do your innovation. So you can cut some costs, but not to the limit that you are not ready if the market is coming back. And okay, that's the drivers. And I think we have also to work closer together as an industry, as I mentioned before, overcome those difficult times.
Okay, thank you. So I think it's quite clear the industry is going through a very tough patch right now, and the solution is innovation, and there's clearly clever people here who can find a solution somehow. May take a little while, but I'm sure we'll get there. So I'd like to thank my panelists, Peter Tinner from Oerlikon Solar, Dieter Manz from Manz, and Stefan Rinck from SINGULUS. Thank you.
Thank you.